When it comes to question of NRIs, two laws govern them, the FEMA law and the income tax law. Can you, for the benefit of my audience, explain these two laws?
Sometimes for certain particular type of transaction, both Income Tax Act as well as FEMA may be applicable. They have to carry out all these transactions in a financial year from one particular bank only. This is the rule. But if they are changing, there is also procedure for that.
Tell me, an NRI needs to have NRI, NRO account. They can't be allowed to have a savings bank account. They cannot freely transfer money from savings bank account to their own NRO account. This is mandated as per the income tax law, or is it as per the FEMA law?
So it is more applicability of Foreign Exchange Management Act on this particular type of transaction or conversion of these bank accounts when there is a change in residential status, etc. It is more of FEMA requirement rather than income tax requirement.
Okay. Hello everyone, welcome to this episode of Expert Speaks. When it comes to question of tax matters or litigations or various aspects of various laws, you have got so many questions. We have done countless videos on the topic. Nevertheless, day after day, you keep asking me lots of questions pertaining to the NRIs. We just thought, pick up those popular questions that you have asked, frequently asked questions, and ask the expert on this particular matter. For today, we have picked up the topic pertaining to the income tax and related laws for NRIs, which are commonly encountered on a day-to-day basis. So today we are going to talk to expert of the week, Chartered Accountant Mr. Sriram Rao. Stay till the end of the video. He's going to take you through a lot of problems NRIs face and how you will come to know what is the right and what is the wrong and what is the best method for you to stay on the right side of the law. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewer, who can be better to talk about income tax matter than my popular guest speaker, Chartered Accountant Sriram Rao. For those of you who are watching him for the first time, he is a practitioner of direct taxes, partner at Nitin J. Shetty & Co., a person who has helped lots of NRIs in solving many of the issues bothering them in the matters of income tax. Welcome to this episode, Sriram.
Thank you.
Yeah. So let's get started. Today we don't have a structure as such, so I'll be asking you the questions the audience has asked. Try to make it as simple as possible so that people can understand. I have collated a few queries here and I'll ask you one by one. Is that fine?
Yes, definitely.
First, there is a confusion between different laws. When it comes to question of NRIs, two laws govern them, the FEMA law and the income tax law. So people get confused which law is right, which law is wrong, which law necessitates them to follow certain rules. Can you, for the benefit of my audience, explain these two laws, how it applies to NRIs in as simple way as possible?
Okay. Generally, for any non-resident, as you mentioned, FEMA, Foreign Exchange Management Act 1999, as well as Income Tax Act 1961 are generally applicable. So the name suggests for both these laws. For example, for income tax, it is simple, taxing the income of any person for that matter, and even for a non-resident for that matter. So as far as taxing any income is concerned, then income tax provisions will apply. It may be for determination of residential status, and based on the residential status, how much, what and all income has to be included in their total income, what is the rate of tax to be applied on that, all that are governed by Income Tax Act. Now, when it comes to FEMA, Foreign Exchange Management Act, whenever there is a exchange of foreign currency with India, there will be applicability of FEMA on that particular transaction. The FEMA law is applicable either for inward remittance of foreign exchange from outside to India or for outward remittance of foreign exchange from India to outside. So any bank transaction, a non-resident or a resident for that matter, anybody is doing that between an Indian bank and a foreign bank, or some account which is held in India and outside of India with his own account or somebody outsider's account, whatever nature it may be, there will be applicability of Foreign Exchange Management Act. Sometimes for certain particular type of transaction, both Income Tax Act as well as FEMA may be applicable. And at that juncture, for that particular transaction, both these law and compliance therein has to be complied with.
Right. Now, what is that? The rights or the compliance requirement an NRI has to go through with reference to these two laws?
See, generally, whenever there is a cross-border transaction, foreign exchange management or foreign exchange transaction between India and outside of India, the bankers are the one who are actually facilitating this transaction to be carried out. So, the bankers are the righteous person to advise you on Foreign Exchange Management Act. However, most of the times, the clients or the person who is making a remittance or inward or outward, they may get confused. So at that point of time, they have to look into the particular provisions of FEMA. And each provision of FEMA has got different type of compliance. So, for example, if there is a remittance to be done from India to outside of India, and there is that remittance is sourced out of some sale of property in India. For that, under FEMA law, before remitting the transaction, what is the source and what is the purpose? Both has to be specified, and there will be remittance form that needs to be filled and provided to the banker. Generally, for one particular person, for carrying out these kind of foreign exchange transactions, there will be only one banker. Now, that banker will be considered as AD banker, authorized dealer banker. They have to carry out all these transactions in a financial year from one particular bank only. This is the rule. But if they are changing, there is also procedure for that. Similarly, there may be inward remittance. Somebody wants to invest in India. They want to buy some shares in India. For that, there will be separate compliance requirement. They want to make a foreign direct investment by incorporating a company in India. For that, there are separate compliance requirement. So, some compliance requirements will be done through your AD banker, or some compliance requirement has to be done by you voluntarily. So, this which has to be done when? That needs to be verified each particular, whenever, before carrying out any particular transaction.
Let's make it more simple now.
Yeah.
Tell me, an NRI needs to have NRE, NRO account. They can't be allowed to have a savings bank account. They cannot freely transfer money from savings bank account to their own NRO account. This is mandated as per the income tax law, or is it as per the FEMA law?
See, banking transactions are mandated through RBI, and this is transaction per se. So, they are maintained or controlled by the banker, which is governed by RBI. So they are always covered by Foreign Exchange Management Act. It is Income Tax Act. I mean, if you see,
it only looks after whether you have an income or not, is it taxable or not?
Exactly. That's it. Income tax is actually much more simpler than Foreign Exchange Management Act.
Right.
So it is more applicability of Foreign Exchange Management Act on this particular type of transaction or conversion of these bank accounts when there is a change in residential status, etc. It is more of FEMA requirement rather than income tax requirement.
Okay. Let's move to another popular question people ask. Self-doubt. Am I an NRI or not? Recently there was one video done by Mr. Vijay Mallya. Very popular video. It saw millions of views. Where he went on to say that I maintain my NRI status by staying 182 days outside of India. Everyone who stays outside of India 182 days in a year, is he an NRI? Or is there more to it? How it is described in the law? Who is an NRI? Who is not an NRI? Can you please give the correct answer to this? Otherwise, the people will get confused that I'll go out of India for 182 days, I'll stay there and I am an NRI. That's the feeling people have.
No. See, I'm not going to comment too much on what Vijay Mallya has said. He might have, commented or, based on his experience and on his particular case, he might have commented on it. But the 182-day rule is to determine your residential status and especially the question of whether you are resident in India or not. So, the question is it is not that how many number of days you stayed outside of India. What you need to see is how many number of days that you have stayed in India.
Right.
The 182 days, that rule is almost, sacrosanct and, by default we can say. So if a person stays in India for 182 days, then he will definitely become a resident in India. This is how that has to be looked into. It is not that if I stay for 182 days outside of India, I will become a non-resident. No.
It's the reverse.
It's the reverse.
So you stay for more than 182 days in India.
You will become a resident.
So without doubt, you become a resident in India.
100%.
Right.
And this is rule as per income tax, not under FEMA.
Right.
Okay. This is rule under Income Tax Act, not under FEMA. FEMA is different. 182 days rule will be applicable to determine whether you have stayed in India for that many days, then you will become definitely a resident. Right? So now there are multiple other clauses which says even if you stay for 60 days in India in a financial year, along with 4 previous year you have stayed for 365 days in India. At that time also you may become resident. There are rules which says for certain type of purposes, when you are already outside of India, coming to India for the purpose of visit, at that time, and your income is exceeding 15 lakhs. So at that time, even if your number of days stay is 120 days or more in India during the year and 365 days during preceding 4 years, at that time also you will become a resident. So you first have to determine whether you are a resident in India. If you are not a resident in India, then you will become a non-resident.
Right. And you look for other qualifying clauses.
Exactly. You cannot see whether I am a non-resident in India. No, that is not the question to be asked. Under Income Tax Act, the question to be asked is whether I am a resident in India. If I am not resident in India, then you will directly become a non-resident in India. This is very straightforward as far as income tax is concerned.
See, while filing tax returns, my chartered accountant earlier was not asking me a few questions. Now he is asking, let me know how many days you spent in India in 3 years before, 2 years before, 1 year before. It was not there before. I observed this in last 1 or 2 years. Probably that's the way it is designed now. So earlier days it was you declare and the system will approve. But now you have to feed the data and the system will say whether you are a resident or non-resident. Is that the side we are moving into?
Yes, it is somewhat similar to what you are saying. I am not saying exactly the same, but you have to declare how many number of days stay that you made in India during the relevant year, previous 4 years. And in certain cases, if you become a resident, then to qualify as a not ordinary resident, previous 7 years, what was your residential status? Previous 10 years, what was your residential status? All that needs to be verified. And in my experience, this requirement is there from almost 10 years now. Almost 10 years, 9 to 10 years. And at the beginning, nobody was, caring for it to be more specific. They will ask you whether you are a non-resident, and then they'll put how many number of days stay. Approximate, you tell me, that money they were putting. But not now. You should not make that mistake of putting approximate number of days. You have to put exact number of days. You have to verify your passport. What is the date of entry? What is the date of exit into India during a year, and determine that and mention that perfectly in your return of income. Because once you declare that, then it becomes a document. At any point of time, you have to prove something, then that will be the document which will be referred to, either by you or even by the other
Government
authority.
has all the details. They scan the passport and you give the passport number when you came in, when it gone out. It's all there.
Absolutely, and you are supposed to declare your passport number or your TIN, tax identification number, outside of India as well in your return of income. One of the two, at least one of the two, that you have to must declare if you are a non-resident. So all these data they are already having. They are just trying to get a proper declaration from you. They'll cross-verify while processing.
Right.
So if there is a mistake, then there might be issues for you in future.
Right. So going back to the same Vijay Mallya episode, my guess is that it's many years before incidents. Probably these checks, balances were not there at that point of time. The tax declarations made by the individual would have become the basis of whether you are a resident or a non-resident Indian. So you didn't have a checklist of how many days you really spent outside. You didn't have that system of only stamping the passport, but there was no electronic signatures which are around that. Probably that could have given rise to that interpretation. So no one should take that as 182 days you are not staying in India doesn't mean that you become an NRI. There are other clauses which have to be adhered to.
Again, his case might be not more of income tax, but more of FEMA also.
Right.
Because FEMA, it is, even though that 182-day rule is there under FEMA also, but still it gives different other criteria, whereas a person may become resident or non-resident based on those. So, considering that what statement he has made, nobody has technically asked him what is the thing. It is more of general conversation that has happened.
Right. No, the issue came because there are many YouTubers who amplified the issue and created a sensation around it, made it as if that Vijay Mallya says it's 182 days, so you are an NRI. That looks, kind of a childish kind of a way of looking at things. Anyway, let's sort out one more issue which is there in the minds of the audience. Now there are NRIs, and in the recent 1 or 2 years prior, there was an additional clause which came in which said, if you have 15 lakh or more income in India, certain others things have to be looked into. In a simple way, please tell me, how does the equation change if an NRI has 15 lakh income in India?
Now this 15 lakh income threshold, that is India sourced income, we can say approximately, not a foreign sourced income, India sourced income. So that will have an impact only under two circumstances. The point number one, if you are already outside of India and you are an Indian citizen or a person of Indian origin, those people only, and they are already outside of India, coming to India for the purpose of visit, not for final settlement or not for any other purpose, or they are coming only for the purpose of visit. Their family is there, friends is there, something like that, and they always had an intention to go back. Those kind of people. If their income is above 15 lakhs, India sourced income, then there will be two conditions to be looked into. That is, one is during the year, what is the number of days stay that they have made? If that is 120 days or more. Along with that, during preceding 4 years, apart from that year, prior to that, 4 years, their number of days stay is more than 365 days. If both these conditions are satisfied, then they will become resident, but not ordinarily resident. This is the change. By them being a not ordinary resident, taxing of income may not change much for them at this point of time.
Because they have an RNOR status.
Yes, RNOR status will tax the income of a person in similar to not ordinary resident, non-resident, right? Not ordinary resident and non-resident taxing income is almost similar. But one addition is, if that person is having business outside of India and that business is controlled from India, then the income earned out of business controlled outside of India, income earned out of that business which is controlled from India, that will be taxable in India. Similarly, if that person is having a profession outside of India and that profession is set up in India, at that point of time, or that profession is set up from India there, at that point of time, that profession income will also attract tax in India. This is the only two type of income will attract additionally into tax when that person will become a RNOR, not ordinary resident, from a non-resident.
So for most of the NRIs, it's a non-event.
Correct.
Right? So
Correct.
it's the status quo continues.
Correct.
You don't have to worry too much about 15 lakh threshold and other things. So your income which is outside of India will not get taxed.
Correct.
Even if you are treated as an RNOR. But people like businessmen, people like professionals, visiting doctors, visiting lawyers who appear in different courts in the world, those are the people who must be thinking about does that impact, and that's where you have to talk to your chartered accountant and seek clarity on this.
And similarly, one more is there, 15 lakh threshold. Now this number of days stay, that and all is the basic conditions to be looked into. But after looking into all these things, you have become a non-resident. That is there, if I say technically, there is section 6 subsection 1 rules. As per that, you have become a non-resident because you are not a resident as per that particular subsection. There is one more rule, 1A. which is making a person a deemed resident in India. Okay, so deemed residency means you are not a resident, non-resident as per the basic rule,
But I'll treat you as a
resident for the purpose of taxing.
Which category is
Now, this will come only if that person is satisfying 4 conditions. One, a person is an Indian citizen. It is applicable only to Indian citizens,
this? So not to OCI card holders.
not to OCI card holders or foreign nationals, nobody. Okay? Only Indian citizens who are not liable to tax outside of India due to their domicile there. Meaning thereby outside of India they have a permanent residency. But even then that in that country they are not liable to tax. Right? And their income in India is exceeding 15 lakhs. So that 15 lakh criteria will come here.
Right.
At this point of time, they will be again become a resident in India. Even though under the basic number of days stay, that rule they have become a non-resident, they will be deemed as a resident in India.
Okay.
Okay. So for in that criteria also that 15 lakh threshold has to be verified. Right. So again this deemed residents will only become a NOR, that is not ordinarily resident. They will not be becoming a ordinary resident.
Right. So the deemed residency status applies only to an Indian citizen.
Correct.
And because of nature of your stay outside of India, which makes you not domicile for taxation in any specific country. Let's say that you have a visa in UK and you have a visa in Canada. You are staying in multiple countries because you have long-term stays there, and you will manage it in such a way that you don't get taxed in any single country.
Correct.
You are an Indian citizen and you have more than 15 lakh income in India, then don't feel happy. You will be treated as a resident Indian, deemed resident Indian, even though you may staying outside of India.
Correct.
Right?
Correct. Absolutely.
Talking about RNOR, there is one more popular myth or truth. We have done the videos, but I want you to hear from you today that clear answer. People assume that during the RNOR phase, my NRE FD is not taxable in India. It's just not the NRIs believe it. There is a large number of professionals, chartered accountants, commercial accountants, they also tell people that NRE FDs are not taxable in India during RNOR phase. Is it true or is it false?
The answer is absolutely incorrect. The statement what you made is absolutely incorrect. Not because of the residential status, but because of the fact of the case. See, first one need to understand is technically Income Tax Act actually taxes this NRE interest also. But they have given a specific exemption. So basically you are liable to tax, but you are given an exemption under Income Tax Act. That exemption is applicable for a particular type of people only. Right? Now that provisions are given under section 10(4) clause 2. Now that provision clearly says any individual who is eligible to maintain non-resident external account, that is NRE account, and earns interest therefrom, he will be given an exemption. So you clearly have to understand it is every individual who is allowed to maintain NRE account, he will get an exemption. Now it is not talking about residential status when it comes to that exemption clause. It is talking about only maintainability of NRE account. Maintainability of NRE account is directly connected with your FEMA law. If FEMA law says that you are allowed to maintain NRE account, then you will get exemption without any problem. That means your residential status under Income Tax Act has got no relevance either to tax the interest earned from NRE or not to tax or give exemption or claim exemption for the interest of NRE. Meaning thereby, it can happen like this. A person who is an ordinary resident and ordinary resident, not NOR, he is having an NRE account. That NRE account is eligible to be maintained by him as per FEMA law. Even though he is a ROR, that is ordinary resident, he will get exemption.
Under what conditions that is permitted?
It is permitted something like this. Income Tax Act says a residential status, it is for full year. Whereas FEMA says residential status will change during certain fact and circumstance. For example, I am a person who is leaving India for the purpose of employment, say in the month of November. So he has stayed from April to November all the way in India. So his number of days stay has exceeded 182 days. Prior to that, he has not gone outside of India at all. At this point of time, as per Income Tax Act, for the whole of that year, starting from April till the end of March, 31st of March, he will be a resident in India and ordinary resident. Whereas, in the month of November, he left India for the purpose of employment. The intention is to take an employment outside of India. That being the case, as per FEMA law, he will become a non-resident the day he left India for the purpose of employment.
That's under FEMA law.
FEMA law,
Not
under income tax.
Okay.
Because that is transaction based. FEMA law is transaction based. Under FEMA law, he became a non-resident. So at that point of time, the question will come whether you can maintain resident account. The answer is no. From November, he has to redesignate all his resident account to NRO account and he will be allowed to open NRI account. November, he opened a NRI account as well and he kept on making deposits. Whatever he has earned outside of India, kept a fixed deposit, or even the NRI SB has kept. He has received interest. That is exempt for him even during for the whichever he has interest, whatever he has earned from NRI account post that November till 31st of March. That will be exempted in his hands because as per Indian Income Tax Act 1042, an individual who is allowed to maintain non-resident external account will get exemption from interest from NRI. So this can happen reverse. A non-resident who came to India in November. Prior to that, he has not come to India at all. 4 years. He became a non-resident as per Income Tax Act because April to November he has not come at all. After that, he has come and stayed for less than 182 days. So he may continue to be a non-resident as per Income Tax Act. But November, when he came back to India for permanent settlement, not for visit, permanent settlement, he will become a resident as per FEMA.
Because of intention.
Because of his intention. He has come back to India to permanently stay in India for final settlement. So, on that day itself, he has to redesignate all his NRO, NRE account to resident account. That time, if you don't redesignate, at that time, the maintenance of all these NRE, NRO accounts are in violation of FEMA law. That means you, an individual, not eligible to maintain NRE account, you are maintaining.
So the exemptions given gets void.
Why? And that interest will get exemption for that period only when he was a non-resident as per FEMA. That is up to November, his return back. From return back date, whatever interest he has earned, that will become taxable in India even when he is a non-resident.
So while filing tax returns, the moment you say that I have come back and entered India on such and such a day and I have lived there, forget about whether you deciding. The system itself may say that this is NRE account held against the law. So I will bring it under taxation. Can that happen?
Presently no, because of the reporting system. The bankers, whenever they communicate to the tax authorities about various type of deposit or accounts what one person has maintained, they never communicate what type of account it is. They communicate as a bulk. The tax authorities will not have that data as of now. But in future, definitely it might happen. If it happens, then it will be automatic pick.
More people use this route to violate it, the system will be tightened.
Definitely.
How many tightening has happened till now? All the tax loopholes have been taken out. Right? This is just a matter of time. And NRI population today is not a small population. 31, 35 million. It's bigger than many of the states, many of the countries. Right? So it's just a matter of time. Somewhere the government will listen to it. Right? So the point here to note here is that if you are a returning NRI, you are under an obligation to convert NRE, NRO account as soon as you come back at the earliest possible date. And beyond that, your maintaining the accounts will not become tenable under the FEMA law. Once you hold these accounts in violation of FEMA law, income tax which had given you an exemption for the interest, because you are holding it as per FEMA law, changes to you are holding it against the FEMA law. As such, the interest become taxable. So my understanding is correct in that case.
Correct.
Right. One another point, a lot of NRI parents raise this issue with me. Look, these days children go outside, settle down. You have lots of settlements in UK, Europe, Canada, Ireland, US. Countless people go. When they are resident Indian, the parents particularly have multiple properties. Now they are getting older. They have no intention to come back. So children will not come back. Children don't want this property headache. So parents are thinking that I will settle these properties. I want to make this money paid or repatriate this money to my children and close that issue. One of the questions raised or the problem area is, I am given to understand whether I do not know whether it's true or not. A person who holds multiple properties cannot repatriate money if it has been by sale of more than 2 properties. Is it correct as per the law, this belief, or is there more to it? Or in such a case, how people can sort out the issue? Their properties belong to them. They are not violating anything. The circumstances make them go and stay abroad. So ultimately the properties have to be settled in favor of legal heirs. So how people can sort out this issue?
See, this has come into picture because of application of Foreign Exchange Management Act, FEMA. Under that, there are several master directions, and a couple of master directions have got rules given thereunder. The general master directions about acquisition and transfer of immovable properties, that has got one clause which says that any person, non-resident, cannot remit from India the proceeds which he gets from sale of more than 2 residential units, that is for his life, right? So this is considered as general rule which is given for remittance of proceeds out of transfer of property which is held by a non-resident in India. Now this is very clear, but when it comes to one more notification which is for remittance of assets, this is more of specifically applicable to non-residents, NRIs, who wants to remit any proceeds from sale of assets which they are holding in India. They have given a limit of $1 million per financial year for making remittance from India to outside of India. This is generally called as $1 million scheme, which is applicable only to non-resident. That actually in one place gives an exception to the general clause or general master direction which has been given for remittance of sale proceeds from India to outside of India. So there, under that provision, if the sale proceeds from more than 2 residential units are within the 1 million limit, then they can remit up to that amount, even if it is exceeding sale proceeds of exceeding more than 2 units. Meaning thereby, this is our opinion on this case, that person will be allowed to remit even the 3rd residential unit or 4th residential unit, so whatever may be, under $1 million scheme. That means there will be a cap of $1 million remittance from India to outside of India out of proceeds from remittance of assets. That cap is per annum. If it is more than that, then he can make the remittance in the next year. So it will go on like that. But within the limit of 1 million, he can remit even for properties or residential units more than 2.
So as per the statute books, there is a conflict in that case. That is,
if you read the master direction as per that and this separately, right, then there will be conflict. But if you have, when you are reading a law, you should read it holistically. And whereas the transfer of or remittance of proceeds from immovable properties or even the other assets is more general in nature, $1 million is more of a beneficial provision which is being given. So, and it is more specific, applicable for remittance of assets only by a non-resident. So it's a beneficial scheme for the non-resident. It is more specific and a beneficial provision. That's why we are of the opinion that that provision is overruling this. But if you read it separately, then obviously there will be a conflict, and you will not be allowed to remit more than remit proceeds of residential units more than 2 for your life.
Okay. Mr. Sriram, we can go and discuss this on and on and on. It's a never-ending story.
True.
Within the scope of time that we had, we covered as many points as possible. I have a barrage of questions. I'll keep troubling you again and again. In our next episode, whenever that happens, we will take the next set of questions and try and answer the queries that could be there in the minds of our NRI friends. So thank you very much for your time. and courtesy to come all the way to our studios and give all these finer points for the benefit of my viewers. Thank you very much.
You're welcome. It is always a pleasure to come to your channel and provide my inputs, whatever way possible.
Dear viewers, hope you got answers to most of the popular questions that could be there in your mind when it comes to question of NRI affairs with respect to income tax, NRIs, NRI FEMA requirements, as well as returning NRIs for those people who are becoming NRIs for the first time. If it gave you the answer, do give me a thumbs up. Do not forget to share these videos with all the places, your friends, relatives, near and dear ones, social media handles on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another expert next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.